Hi y'all, it's Kimberly here. It's a really windy day here in Texas. I hope you can't hear the drag on the car, but there's probably a few wigs flying in the air here. We still have a little big hair left here in Texas. Today I'm going to be talking about credit history. And this is continuing on with my personal finance series. And your credit history is basically how you pay your bills, how much you pay, and whether you pay them on time. Those are probably two of the main factors that people look at when they're trying to give you credit. There's other factors too, which I'll go into that in my part 2 series. But for today, I'm just going to talk about the history of credit, how it evolved, and how it affects you in modern day use. Some of the first recorded uses were in around 3000, 3500 BC Sumer. Well, actually, I want to backtrack. I think that probably, to me personally, I think it probably started with cavemen or Neanderthals or in that time period, because I think that they probably did do favors for each other. You do this and I'll give you meat or a pelt or something like that. So I think it kind of did evolve earlier than this. Or there are other recorded in other cultures like Greece, China, there's other histories of it too, but one of the main economic uses of it was in Sumer, which is Mesopotamia, which would be like the modern day Iraq and Kuwait, really around there. I'm not too sure. I haven't looked at a map really, but that's what Mesopotamia is today. And it's been called the cradle of civilization, which is where the use of money and credit in business kind of progressed and evolved into helping that country really build up their finances and become more stronger power. And around 1800 BC in Babylon, the interest rate for a loan for grain was 33.33%, which is really high. I think that's outrageous. And for silver, it was at 20%, which is still really high. And that's just, to me, that's just crazy. And in 50 BC in Rome, there's recorded accounts of credit being used for land purchase. And then in the Dark Ages in Europe, essentially there was the implosion of the Roman Empire. And the economic failure of that was probably due to a lot of credit, not paying bills, and a lot of other factors too, not just that, but the economic failure of Rome was, a huge impact on the world. And the church stepped in to ban usury, which is the practice of charging interest. It was around 800 AD, which was in the rule of Charlemagne, which he really built up a lot of the business aspects of the Dark Ages. He really infused the Dark Ages and made the world kind of come out of the Dark Ages, I believe. And let's see, I have my notes here, so I didn't memorize all this. The explorers going to other worlds, that kind of helped the world flourish too. It helped build new worlds, like coming to America, invading. That's unfortunate that other countries invaded other countries, but it did build up civilization in that way. And other money was established, in different currencies in different countries. Different rates of exchange for each country would decide, what they're going to, if they wanted to buy grain from another country or other things like that. A lot of it was done on credit or either paying with a type of, I don't want to say homemade, but they made their own type of currency, which, each country does today have their own type of currency, but the US dollar is probably one of the most widely used forms of currency. And you can, the interest rate in England was established at 10% in the 1500s, so that kind of settled things in a lot of countries started to use their own interest rate. So that kind of helped business, credit, help it evolve and go from country to country. And then you can think Jeremy Bentham, which was an English philosopher. who wrote a series of books called In Defense of Usury, because remember, the church had stopped the practice of interest, but a lot of countries didn't, they have their own interest rates. They didn't follow along, and then so it became commonplace because of this guy writing these papers that, it did help industry and it did help business and it helped people, if they can't buy something, if they don't have the money, then that sector of society is left out, and there's a huge loss, for the economic status of that country. If they can't make money, the country will not prosper. So that kind of did help, but it means almost every place you go, interest is going to be there. You're going to have to pay interest for everything. And in the 1800s in England, there was a group of tailors that decided, well, some of our customers aren't paying their bills, and they got together and they would talk about who didn't pay their bills, and they would refuse credit to these people. And so that progressed into businesses actually putting ads in the paper with your name saying that you don't pay your bill, which would be really embarrassing, but that's kind of the beginning of actual paper credit agencies, not agency, but the use of paper to report your credit. And then in America, the New York Mercantile was formed in about 1841, which was subjective, and it was based on a lot of rumors, and it was very biased. They could record your political associations, or who you're keeping company with, or some things of that nature that really were too personal to be considered for use of credit, like in modern day use of a credit report. And in 1899, the Atlanta Retail Credit Company eventually became Equifax, that we know of today, is the oldest reporting credit agency. And now these early credit reporting agencies used information, like I said, that pertained to your character. They could report on your political affiliations, your sexual behaviors, homosexual. They were very discriminatory. Even racist factors were used, which is not allowed today. It's very illegal to do that today. And then in Detroit, which is where they built most of the cars, well, they don't do it nowadays, unfortunately, the Model T became like the symbol of wealth, because you had to pay cash to get that car. They didn't have credit then. But in 1919, GMAC, which is called something else, I don't remember what, they changed their name to something else. They started taking installment payments for cars at 35% down payment. And that's a lot, because nowadays you can get a car with $1,000 down. But can you imagine having to pay 35% down? So things have changed a little bit. And nowadays, well, that started the practice of getting radios, refrigerators, washers, whatever on credit. That really, GMAC really started the credit revolution, where you could just buy anything on credit and instead of having to pay cash. And that is a good thing and a bad thing. So that's why I call it a revolution, because paying cash, you're debt free. But if you pay on credit, which you have more stuff and you have access to more things, and the country actually does flourish on credit, but can be very dangerous. It can make, if too much credit is floating around and the bills aren't being paid, things implode. Things don't work, no money, no work. So department stores, Diners Club, Visa, Amex, American Express, MasterCard, they all started giving out credit cards in the 1950s. So if you have ever been a cashier, you may have seen a American Express card that says a member since. Some of those credit counts go back to the 1950s. And then during the 1960s, they started to digitize the records, because these were all in ledgers, paper ledgers, where merchants wrote everything down by hand. But then they started using digitized records, which is computerized records, and it made it a lot faster to get credit, or sometimes you might have had to wait 2 weeks to decide for them to decide to give you a car or whatever. Now you can just go and you get one, or you get a car in one day. But it used to not be like that. It used to be time consuming sometimes to apply for credit. Now you can do it online. You can get, turned down or accepted for your credit card online in a matter of minutes. And in 1970, the Fair Credit Reporting Act was implemented, which was to protect consumers from racist or biased material being used to determine, whether you're creditworthy. And there are two things called the FICO score and the Vantage score, which are algorithms that are used to determine your overall credit from the three main credit bureaus. And I will go over that in part 2. There's just one little thing I want to add on. Debtor's prison doesn't exist. Well, actually it does. They say it doesn't exist, but I mean it does. Because if you don't pay a ticket, or if you write a hot check, you can still serve prison time for that. And a lot of things that are on credit, if you don't pay it now, it can be turned into a theft charge. So essentially, debtor's prison does exist. So really, to keep yourself out of bad credit, pay your bills and pay them on time. Even if you have to pay just the minimum amount, the amount that you pay is usually the principal plus the interest. Even if you pay a couple of dollars extra to add on to the interest, that really can help you out. Okay, thank you so much, and I'm going to go on with part 2 in a few days, and I'll talk about credit cards and the credit reporting agencies and how to keep your credit, keep a good credit cycle, because it does determine whether you get car insurance, housing, other things. A lot of things are determined on your credit worthiness. And credit worthiness, or your credit history, is really important. You'll learn that as you go on. As you grow older, you want to buy a house, you want to get a better car, even your job. People can determine whether they want to hire you based on your credit now. Okay, well, I'll see y'all next time. Thank you so much for listening.